Welcome to Life Happens, Money Matters. I'm your host, Adele Williams, founder of American Financial Pathways. Before we get started, I want to take a moment to thank everyone who has been listening and supporting our podcast so far. I know your time is valuable, and the fact that you chose to spend some of it here with me each week truly means a lot. Whether you listen to one episode or you've been here from the beginning, thank you for being a part of this journey. And if you find these conversations helpful, I hope you'll subscribe so you don't miss an episode and share the podcast with someone who might benefit from it too. Every listen, every share, and every new subscriber helps these conversations reach someone else who may need them. If you're looking for financial conversations that are practical, honest, and rooted in real life, not financial jargon, you come to the right place. Every week, we'll take one financial topic and break it down into simple, meaningful steps that you can apply to your own life. Because financial confidence isn't built overnight, it's built one decision at a time. So let's get started. Last week, we stepped back to look at the financial pathway we're building together. Today, we take the first step with a 5-part series called Banking Basics in America. In this first episode, we will look at the account you already have and one cost that can be easy to miss, the monthly fee. And in the series ahead, we'll take a closer look at checking and savings accounts, debit cards versus credit cards, account safety, and how to choose a bank or a credit union that fits your need. You can listen from the beginning or choose the episode that fits where you are. Now you may be thinking, I already have a bank account. And if you do, that's great. But having a bank account and understanding the account you have are not always the same thing. By the end of this episode, I want you to understand what your account helps you do, the simple difference between checking and savings, and one basic cost to look for, a monthly account fee. Before we get into that, I want to share why this topic is personal to me and tell you what I saw before the other side of the desk. But I want you to think back for a moment. Do you remember opening your first bank account? And what specifically do you remember about that conversation today? As I shared before, I've spent more than 20 years working in banking, and during that time, helped many customers open their first bank accounts. Many customers came in because someone had told them they needed a bank account. They had not always thought about what they wanted the account to do for them. As bankers, we ask how they plan to use the account and which features matter to them the most. Those questions helped us understand their needs and how much explanation might be helpful. But often I saw a question mark on their faces. Some didn't know how to answer, and others were rushed and did not realize why those details matter. And some of them just spent the time scrolling on their phone while we tried to open their accounts. But that did not mean that they didn't care. Opening an account can feel overwhelming, especially when the banking system or even the language used could sound unfamiliar. Bankers genuinely want to help, and they do explain important account information, but there's only so much that can be accomplished during one appointment. Customers may have limited time, and the banker can only go as deep as the conversation allows. I sometimes watch customers leave knowing they had received information, but wondering how much of it they truly understood. It was like handing the keys to someone for a car after showing them the basic controls, while knowing they might still need more time to understand the dashboards and all the warning lights. That stayed with me. I wanted people to have more time to understand what their account was designed to do and how it worked in their everyday lives. That is one reason we're having this conversation today. not to replace the banker, but to give you the time to slow down and understand what you already have, so that as you listen today, I don't want you to think only I already have an account, but ask yourself, do I truly understand the account I have? This is why I never assume banking basics are too basic to discuss. When you're new to America, you may be learning a new job, a new language, new responsibilities, and a different way of handling money all at the same time. Or, if you're only new to banking altogether as a first-time account holder, banking language can feel like a whole another language. In America, a bank account can do more than just hold your money. It often becomes the center of everyday financial activity, where money comes in, where it goes out, and a record of that activity is kept. I like to think of it as your financial home base. And sometimes the easiest way to understand what these accounts are actually for isn't through a definition, but it is by seeing how someone uses them. And that reminds me of a grandmother and her grandson. Years ago, one of my customers came into the bank with her grandson. He was about 6 years old. She wanted to open a savings account for him. And I still remember that very first visit because he brought his little piggy bank with him. We actually cracked open that piggy bank right there on my desk and counted his change for his very first deposit. And that first deposit turned into a routine. Every Friday, his grandmother would bring him back to the bank and he would make his weekly deposit. Over time, it became our little routine. And there were Fridays when I wasn't there. Maybe I was off that day or away from the branch, and when I came back, sometimes I would find a little handwritten note from him waiting for me. It would say something like, "Hello, Miss Adele. I came today, but I didn't see you. I was here to make my weekly deposit. Hope to see you next week." And I love these little notes, because think about what that meant. He didn't need to leave me a note. He had made his deposit. He had done what he came here to do. But somehow this little 6-year-old had already created an expectation for himself. This was something we started together, and he wanted me to know that he was still keeping up his end of the bargain. And by saying hope to see you next week, he was already setting the expectation, not for me, but for himself, that he would be back again to make his deposit. Looking back, those little notes were his way of holding himself accountable to the habit he was building, and I had the privilege of watching it happen. I wasn't hearing the story from his grandmother's years later. I was there with him. I was there when we cracked open the piggy bank, counted the change. I was there when he came back each week to make these deposits, week after week. And eventually, I watched that little 6-year-old grow into a teenager who came back because now he had his first job and needed a checking account. His savings account still had a purpose. That was where he had learned to put money aside. He wanted to go to college. But now he had a paycheck coming in and the money he would use in everyday life, and he needed something different too. Years later, I didn't need a textbook definition to explain why he needed a checking in addition to savings. His own life was showing us the difference. Sadly, his grandmother eventually passed away, but the habits she helped him build didn't disappear with her. And that's probably what has stayed with me the most about that family. That first day, it looked like we were just opening a savings account for yet another minor. But looking back, we were watching the beginnings of a financial habit that would follow him as he grew up. So let's take what the grandmother taught her grandson and make it very simple. Two account types most people encounter first are checking and savings. Simplest way to remember the difference is this. Your checking account is where your money moves, and the savings account is where it waits. Think back to that little boy. When he was young, he was putting money aside in the savings. Later, when he started working and he needed somewhere for money to come in and move so that he could use that money for everyday life, that's your checking. Checking is generally used for the money you receive and spend. Savings is generally used for the money you're setting aside for a future plan, to buy a home, to go on a vacation, to buy your first car, or for your first child. Now let's add one more piece. Your debit card is usually connected to your checking account. When you use it, you're spending your money out of that account. If you have $100 in your checking and you swipe your debit card or you tap it or you buy something online for $20, that $20 is coming from the money in your checking account. A debit card is not a credit card. You are not borrowing money, and using a debit card does not normally build your credit history. So don't make this complicated. For today, simply remember 3 things. Checking is where your money moves. Savings is where you keep it for a future purpose. And your debit card gives you access to the money in your checking account. Now that you know what the account is doing, let's talk about one thing I want you to look for: the cost of having it. Some checking accounts charge a fee each month simply for keeping the account open. Your bank may call it a monthly maintenance fee, monthly service fee, or a monthly charge. Different names, same basic idea. This is a recurring cost connected to having that particular account. Now, this is where people sometimes get confused, because you may hear your bank say that the fee can be waived. That's one of those banking words that sounds more complicated than it is. Waived simply means that you are not paying it. Your bank may remove that monthly fee if you meet certain requirements that they communicate to you at the time of account opening. For example, you may need to have your paycheck deposited directly into your account, direct deposit, or you may need to keep a amount of money in your account every day. The exact requirement depends on your account. And this is also why I want you to look at your statement rather than assuming you're not paying a fee. Sometimes a bank may show the fee first as a charge and then show a matching credit or a refund. So for example, if you look at your statement, you may see a $10 charge, and next to it, it might say something like monthly service fee. And then either right next to it or somewhere in your statement, you will see a credit for $10 for that same monthly service fee. If that happens, don't panic when you see the first charge. Look for the credit. The fee was charged, then returned to you because you met the requirements for having it waived in that particular statement period. But if you see the charge and you don't see a matching credit, or you simply don't understand where to look for, ask your bank. When a bank says there is no monthly fee, that means you're not paying a recurring fee simply to keep the account open. This does not mean every other service connected to the account is also free. But we don't need to learn every possible bank fee today. Remember what I said at the beginning. We're taking this one step at a time. For now, I want you to know only 2 things. Does my account have a monthly fee? And if it does, what do I need to do so I don't pay it? That's it. And here is something that can make finding that information much easier. Know the exact name of your account, not just the name of your bank. A bank may offer several different checking accounts, and even though they're all checking accounts at the same bank, they may have different monthly fees and different requirements for having those fees waived, along with different features and benefits they might offer to you. So if I ask, what account do you have? You might say, I bank with ABC Bank. You told me where your account is. You haven't necessarily told me which account you have. Or if I ask, what account you have, you might say checking. But again, that is the main category of account you have, but not necessarily the type of account within the list of accounts your bank offers. Think about it like this. It's like saying, what kind of car do you drive? And you answer, a Toyota. Okay, but which Toyota? The model matters because different models have different features. Bank accounts work the same way. That's why knowing the exact name of your account is not enough. You may also want to know the exact name of the account, and we're going to use that for your pathway step this week. So let's look at what we've accomplished today. You took the first step into our Banking Basics in America pathway. You learned that your bank account can become your financial home base. You've also learned checking is where your money moves, and savings is where your money waits. And your debit card gives you access to the money in your checking. You also learned that a monthly maintenance fee, monthly service fee, or a monthly charge may simply be different names for the same basic cost. And you learned something else from that grandmother and her grandson. Understanding banking isn't about memorizing a list of financial terms. It's about understanding what your money needs to do. Sometimes it needs to move. Sometimes it needs to wait to be used for a later purpose. And as your life changes, the accounts you may need may change too. You didn't need to learn every banking term today, and you only needed to understand the next small thing to look for. So here's your assignment this week. Find the exact name of your checking account, not only the name of your bank. Look in your banking app. Look at a recent statement, and then ask one question. Do I pay a monthly fee simply for having this account? And if I do, what do I need to do so I don't pay for it? If the answer isn't clear, call your bank or visit a branch and ask. And remember what we talked about earlier. You don't have to know the banking terminology before you call. You can simply say, I'm trying to understand my account. Can you help explain this to me? That is a perfectly reasonable question. You don't need to change anything today, and I'm not asking you to close an account or open another one. Your first step is simply to understand what you already have. And if you don't have an account yet, save these questions. They are the questions you can take with you when you begin looking at your options. That's one small step. But small steps are how we're building financial confidence. Next time, we're going to continue to our Banking Basics series. We're going to talk about something that can get very confusing very quickly. What happens to your money after it goes into your account? Because seeing money in your account doesn't always mean every dollar is immediately available to spend. And I learned that lesson myself the expensive way. It involved the largest check I had ever received at that point in my life, a very excited younger version of me, and several checks I wrote almost immediately afterward. Let's just say that one check taught me about banking in a way no classroom ever could, but we'll talk about that next time. Thank you for spending part of your day with me. If today's episode encouraged you or made you think differently about your finances, I hope you'll subscribe, leave a review, and share this episode with someone who could benefit from hearing it. And if you're looking for guidance on your own financial journey, or simply need someone to help you understand your next step, visit our website at American Financial Pathways. You don't have to navigate your financial future alone. Until next time, I'm Adele Williams, because when life happens, money matters.